All right, first things first, we're gonna go to the daily as we do. And I just want to mark up. I'm going to start repeating this every class so that everyone understands at least my thought process and how I'm looking at the chart. And first things first is to look at market structure, right? So we're looking at market structure. Next thing is to mark up your key levels. So, and this can be your key level, or this can be the swing of the high. And of course, we have these internal swings here, but we'll get to that in just a second. So, I marked up my internal swing, not internal, my swing high, external swing high. I'm going to also mark up where price broke structure, right? And then I'm going to mark up my low, which is down here. Okay. So now that we've done that, there's something I want to explain too, when it comes to um, marking up on the daily, the 4 hour, the 1 hour. Something that may be helpful for you. I like to mark up on the daily because when you mark up on the daily, whatever time frame you mark up on, every time frame below that is the key level. And what I mean by that is I'm marking up on the daily, right? So that means when I go down in the different time frames, whether it's the 12, the 10, the 8, the 6, the 4, everything below that is going to be the key level. It's still going to be a key level on that time frame. Now, if I go in to mark up, if I go in to mark up, let's go to the 4 hour. So say if I go in and mark up this 4 hour key level right here, when I go to the daily, it's still a key level, but a lot of times you won't see it on the higher time frame. So that means if I mark it up on the 4 hour, that means the 2, 1, anything below 4 hour is going to be a key level below that time frame. Anything above it may or may not be a key level. So if I go to the weekly, for this particular one right here, it's still the same. But you may not see it on a higher time frame if you mark it up on a lower time frame. Does that make sense?
That makes a lot of sense.
Yes.
Okay.
Yeah. Yep.
So that's why I usually 4 hour is a good time frame as well, but you got to make sure you're marking up your key levels. You got to you have to make sure that it is a key level of support and resistance. Okay. So with that being said, because I just mark up the daily, and again, I can mark it, you can mark it up on the 4 hour too. But because I mark it up on the daily, it's automatically a key level on the 4 hour. So, so this is so this was our key level on the daily. We're on the 4 hour. Does anybody have questions about marking up the charts or marking up the key levels? Any questions about that? No? Okay, great.
I don't really have a question because I've asked this before, but just for
You
the
can ask
sake
it
of
again. You
asking,
can ask it again.
okay, just for the sake of it, when you mark your key levels on that daily, can you explain why you're choosing where you're placing the 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 key level and why basically why you're putting it there.
Okay.
Yeah.
So, usually that's why I did the swings first. Like I look for
Mm-hmm.
the higher time frame swings. This was the swing high. So even if I didn't mark up all of this right here,
Mm-hmm.
I'm at least looking for my last swing, right? So let me pull this up just a little bit. So the last swing was this here.
Mm-hmm.
So, and if I'm just marking up my, say if I'm just marking up my high, right? And not even looking to see, oops, not even looking to see what's over there, right? I just know that this is my last swing. So I marked up my high, the high of that zone. This was the break of that structure, right?
Mm-hmm.
And then this was the low of that zone. Now, you have the internal swings. You have these internal swings. So you have this here, this push up here, this here, this push up here, push, this, 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 and this, right? So, but I don't use those internal swings. I mean, if you want, and I'm not saying that you can't, but if I'm looking at this, the last swing, internal swing would be, so I'm just gonna go from here to here. So price did break here. So this would have been the last internal swing right here,
Mm-hmm.
right? So, and let me just delete all this off. Okay, so let's replay all this back. So that would have been the last internal swing. So you could have marked up this high, this break. This was the break of structure here, right? And then this was the low. Okay. So now once, and I'm just going to keep it on the daily. Once we play it out, and we see price broke this structure here, broke this zone here. And of course, if we had gone down to a smaller time frame, or we could have did it from this daily order block on the daily, you could have marked up because price pushed up and then pulled back without touching the zone that and closed above this area. So it gave another bullish order block. So you could have gotten in from here to the next zone, right? So from here to the next zone was approximately 86 pips. So once price gets here and you allow price to show you what it wants to do, price broke through. So now you're looking for you're looking for a pullback for a continuation, but we're also in a bearish order block. So let's allow price to show us what it wants to do. It's keep going. It's going to keep going. So you see how it pulled back and gave a bearish order block. So it's either going to pull back to a 78 or pull back to the 61. Okay. It pulled back to a discounted price. Let's just say that. Okay. Now let's just play it out. So it almost pulled back to the 78. Of course, we know on the lower time frames, we would see the break of structure to the top side. And then you could have started buying it back up to either back up to this zone or continue to wait for price to go up to this zone. So let's just play this out. And actually, that was it right there. So once price got back to your zone, it gave a bullish order block. You could have put your entry here and take it to the next zone. So in a matter of 1, 2, 3, 4, 5, 6, 7 days, it would have went from one zone to the next zone. So for us intraday traders, yes, we can take it from, we can mark up our swing high, even if it's internal, right? We can mark up our swing high and swing low, but just know that because there is a bigger picture that price has broken, price could pull up anywhere in between this here and then start selling again. So as an intraday trader, then you would have to trade it, definitely trade it from smaller time frame zones, because again, we don't know how far this is going to pull back. If we mark up our whole move, our whole swing, price can pull back to the 50%, the 618, maybe even the 78. There's a little, looks like some imbalance right there at the 78, right? And then continue to sell. But once price changes, once price breaks this high here, that to me is the actual change of character for me. Okay. I understand like a break of this high here is a change of character. But again, it might just be going up to the 78, maybe even 88, to possibly turn around and start selling back down again to break these lows. But once it breaks this high here, that's when I'm looking for buys up to this high, because that was my higher time frame swings. Okay. Does that make sense?
So you saying until it breaks going back in the other direction, this lower level right there where you at now? There.
Mhm.
Okay, I got you.
Yeah, so price can, like I said, price can break this internal high, this internal swing, but the swing may only go to the 50%, 618, 78, 88. If it goes higher and breaks this high, then I'm definitely looking for price to then tap into these highs here. And then even with that being said, let's go to the weekly. Okay. So, and you can see it even clearer on the weekly. This is the whole swing. So if we fibbed the higher time frame and price breaks that swing that we were just talking about, and say it went to the 78, so that it would tap this high. Say if it just went to the 78 and not this high. It would be the same thing as this here, just on a higher time frame. This bigger move is a bigger swing move. So once this is a high is broken, then we're definitely looking at these highs getting tapped into. Okay, so we have this high here. Same thing we did with this one. We marked up the high. We marked up the break of structure. And I know y'all can't see that. Hold on. We marked up the high. We marked up the break of structure. Okay. And then we marked up the low. Same thing on this higher time frame. The high, the break of structure, and this move is more for swing traders. Okay, and then this move is more for intraday traders. Does that make sense?
Yeah, it's a wider range.
Mm-hmm.
Yes, ma'am.
So, and did that answer your question to why I mark up the swings that I mark up?
Yes, it
Okay.
does.
And if you even if you marked up the swing, if you look, you can tell that it is, I know it's a key level by the way it moved. So it pushed up and immediately started pushing down. Let's see. About 700 pips, 778 pips. Right? So I know that this is a strong key. Just looking at this one little piece right here, I know that this is a strong key level. So now if I take it and extend it, I know that you see how it tapped? It tapped here, it tapped here, it tapped here, it tapped here. It's going to tap other levels to the left. So I don't have to necessarily see what's to the left to know that this is a strong key level right here.
So key levels are where price reacts often.
Where price reacts often, and
it reacts like aggressively, if you will.
yes, that is the exact word. And I
Yeah.
say that because like right here, like you have a push here and then it pushed up and then it pushed down, right? And then, yeah, that's a key level, but it's internal to this whole down swing. It's internal to price creating lower highs and lower lows. But the minute, so then you have higher highs, higher lows, and higher highs here. So this is a move. This is all one move because it was creating higher highs and higher lows. And then this is a whole move because it was creating lower highs and lower lows. Same with this. I mean, and although we marked up, oh, I'm just do it from here. from here, here, and here. Like all this is one move because the whole time it was creating lower highs and lower lows. And then within there, especially if we went down to a smaller time frame, you had higher highs and higher lows. Well, that's about the same high.
So basically there's levels to internal swings
Yes. Yes.
because this is on a way bigger time frame. And these moves on the 1 day look like those would be key levels on the 1 day time frame.
Yes. So if we go to the daily, it's they're gonna be the same key levels.
Mm-hmm.
And the reason why they're the same key levels is because we marked it up on the weekly. So anything below the weekly, the key levels are going to be the same. Now you'll get some internal key levels, like on the 4 hour. For instance, let me pull this up. So for instance, like you have this little key level here. This is a 4 hour key level. But you see price tap, 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 tap. But when you go back up to the weekly,
it might not be as clear.
it won't be as clear.
Yeah.
Where was yeah. Yeah. And this is actually kind of clear on this one, but I mean, but if you don't know, you don't know, right? So if I go back to the daily or the 4 hour. It's a lot clearer that this is a key level here. Actually, the key level is right here. That's when I say make sure it's clear to you, this is what I mean. This is more clear to me than this here. That's the key level. Because here was the swing, right? That was the break. And then price pulled back to that zone several times. So yes. So I definitely wanted to explain that on the call today. And there was something else I'm going to talk about, but give me a minute. I'll talk about it last. Okay. So that makes sense, right?
Yes, so much. Thank you.
Welcome.
Ultimately, everyone should understand market structure.
Yes.
That is the most important thing.
The most important thing. The most important thing. And I'm telling you, it makes a world of difference in your trading once you understand market structure. So now that I have, see, let me zoom in so I can make sure this is correct. Oops. And this is what I mean by I have to zoom in because I want it to be so accurate that I do not want to be fooled, okay? I do not want to be tricked out of my trades. And as you can see, like that actually broke structure. And I mean, that's how detailed I get when I'm looking at it. Because I want to know if even with what Terry was talking about today, and I'm going to show that in just a second. But this broke structure to me. So that now makes this, because this broke structure, that means this was the swing high, right? And then, and only because that broke structure, that made this the swing high. So now that broke structure and then price pulled up, until price breaks this structure, this is not a swing high.
Yep.
Once this is broken, now this becomes the swing high. Okay?
Yep.
And that right there is when you taught us that. That's when it started to click.
Yes.
That's,
Yes.
I'm telling you, that's what make, so,
Excuse me, could you repeat that one more time, please?
why, yes, sir, just for you, just for you. Okay, so when you have all these swings, right? You have all these swings, you have this swing, price. Let me just break it down here. Okay, so if you're looking at this here,
Kim, I'm sorry to interrupt.
no, go ahead.
I think it could be. I mean, I remember on the one time we had a call on the weekend, and you
Uh-huh.
asked us all to mark the swing highs. That
Uh-huh.
helped me so much. I feel like if you ask us to tell you where the swing highs are, that makes so much sense.
You know
Like
what?
because you know it is one
You
thing.
are you are so right. You're absolutely right. Terry, no, hold on. Let me give you another one because now you can know
Yes,
it.
ma'am.
Let me give you another one.
Mhm.
Uh-huh. Uh, okay, Terry. Are you available to do annotation?
Just tell me how to do it.
Wait a minute, are you on your computer?
I'm on my phone.
Oh, you're on your phone. Okay. Do you know how to do the annotation? I was gonna tell you
That
to,
little pin on the side.
yep.
Let me see. Okay. All right, yeah, I got it.
Yep, you got it. Okay. Now I want you to mark up the swing highs and swing lows on here.
Hold on, let me do this thing. The swing high and the swing low.
Mm-hmm.
Okay.
And I'm gonna tell you,
Listen.
I'm gonna tell you first to do the major swing highs and swing lows, meaning the higher time frame swing high and swing low.
All right, there we go. That's what I was about to say. I'm gonna say this one here. That's my swing high. Now they got a wick somewhere down there, but you don't count the wicks. So this here, well, I gotta hit it again.
Wait a minute, where was your swing
Right
high?
there is my,
Okay,
and right here,
okay. Now where was your break of structure?
break of structure
Mm-hmm.
for the sale.
For the high and low that you just
Oh
marked up.
no, the break of structure was okay. Now I'm going to emphasize this on the lower time frame. It would have
Uh-uh.
been right here, but
Nope.
on your Kim,
Nope.
it's
Nope.
right here.
Nope. Where
You
was your
talking about break to the upside, huh?
no. Where was your
Oh,
you said you marked up the swing high and the swing low. Where is the break of structure of that swing high and swing low?
the break of structure on that swing high and that swing low.
Mm-hmm.
Let me see. Hold on, you're confusing.
Because what had to happen to make that swing high a swing high?
Right there.
Where? I don't see where you are. No.
What?
Yes.
Explain it. You
Yes.
gotta explain the question to me more here.
Yes and no, but we're looking at we're looking at this from a major swing high and swing low. From the bigger picture, not the internals.
Mm.
Mm.
Oh, let me put it. Oh, my bad. I only had half of the picture shown.
Oh yeah.
So yeah, hold on.
There you go. That's it.
I think you wouldn't believe I couldn't see that on my phone with this little the little thing was you mark with it popping up on the phone and it was taking up half the damn chart. I couldn't see all that.
Okay, okay, I believe you. I believe you. Okay, so you're saying this was the swing, right?
Mm-hmm.
Now, in order for this to be the swing high, which is really we're gonna go with this one. In order for this to be the swing high, it had to break this. It had to break this low. I mean, it had to break this low in order for this to be the swing high. So that means price had to come and close below this zone before this could be the swing high. That makes sense?
Okay. Now let me ask you something while we on it.
Mm-hmm.
So now I already know you're gonna say no because it's not the original. But that little area I marked right here,
Mm-hmm.
once price went above and closed, well, I can't call that. Well, I could call that an internal swing high, right or wrong.
Okay. So what is the it's an internal swing. It is, where is your last swing? What is it breaking? What is that zone breaking?
It's breaking right around up in there.
Okay, so then that is your what?
I don't know what.
Your internal swing. Because
Oh
now,
yeah. Okay.
so now you have this as your swing right here, right? The last internal swing.
Mm-hmm.
And then you had your break of structure.
Right.
So in order for, and I'm just gonna clear the screen. Can you clear your screen for me?
How to do that?
On the left, there you go.
I got it.
There you go.
Oh, see, I'm learning.
Every day,
I ain't never did none of this before.
every day. So let's see. So, okay, so that was your internal swing. So you had that break of structure, right? So when you once you have a break of structure, now identify where your swing low would be.
Because I had a breaker structure. It's gonna still be in the same. It's still the same low because it never made a lower low.
No, where would your swing low be? Because once you have a break, then you now
I
have
can't get it. Yeah, right up there.
a
You
swing
mean
low. Where would your swing low be?
that's the best I could do, but right up in there at
Nope,
the bottom.
a little further down.
Oh, let me hold on.
There you go with the squiggly.
That's what I'm saying. I can't make this thing do what I wanted to do.
Hold on.
I'm trying to blow up my phone so I can
let-
blow up the chart.
Oh, that's what you're doing.
Yeah, I'm
Okay,
trying to blow up the chart so I can look at it good.
this is now your swing low. Once
But I
this,
thought that from on my phone that looked like a big wick.
and it probably
Is
is.
that a candle or a wick?
It's a wick. It's
No, we don't count we don't count wicks, Kim.
no, we do.
That's
We
why
do
I'm marking
count.
right there.
We do count wicks because we count the close of a wick. We count the wicks. We always count the wicks. It's just when I'm marking up, I don't always. For instance, when I mark up this zone here, when I mark up from here to here, like I may not include the wick in there because when I go down to a smaller time frame, I don't want this zone to be ginormous, right? So I
Mhm.
just mark up from the body. I marked up to the top of that last wick. So when I go down in a smaller time frame, I'm only putting this zone there for one, to know that I'm in an area where I need to look out for. where I need to pause and see what happens, but I'm still checking to make sure that price is not breaking these highs here, because they're still, because on the lower time frame, these are closed bodies. So if
Yeah, try it on a 30-minute though, huh? Not on an hour. And that,
I don't look at, I'm not looking at a 30-minute unless 30
that's
minute,
why that's why I
30
said I
minute,
thought you wasn't counting though.
30-minute or 15-minute is only for my entries and entries only.
Yes,
Like
ma'am.
to find my entry and the entry only. That's the only thing I use those two lower time frames for. So with that being said, you see how I have this marked up here, because those are my highs, and I have this closed body above it. Now,
Mhm.
this is almost the same as it was today on GJ. I think that was GJ that you said price was.
That's exactly what we was talking about.
Yeah.
Yeah.
So price
Pretty
did,
close to the same too. You're right.
but, and I'm gonna go to it. I'm just gonna go to
Zoom
it.
into it. I can't see. Kim, zoom in. I can't see.
Wait a minute, hold on. Hold-de-do-de-do-de-do. And let's go to the 1 hour. Because on my 1 hour, this was my zone. Now I can mark up here. Even if I marked up just that little bit of wick, price never closed above my 1 hour. So anything
Okay.
could happen at that point. That's why I said this is the real swing right here. That's the
But
real
now,
swing. That's the real
that's what I'm
swing right
saying.
there.
What you just said though. Now you just said you don't look at the little time frame, but on
No,
for
no,
15
no.
minutes that was a candle close.
No, price did not close above this zone. Price never closed above this zone. That's why I was like, hold on now, wait a minute, right? So once price came up here and closed, because this is actually the high right here. So I don't want you to get confused, because we're not marking up this whole thing right here, that when price comes up here, that it's and I want to see it on the 1 hour first. Once I see it on the 1 hour, meaning right here, this broke through, then I'm going to the 30-minute or the 15-minute to
Now,
look for
can I
my entry.
say something?
Yes, sir.
Now I'm starting to wonder. And I'm gonna be honest with you, if something is wrong with the way I look at it, because I'm always finding myself looking for the counter trade. Because now brought it back up to the 1 hour how you had.
Okay.
Now see, I see all that imbalance all the way up there.
Up here.
I feel like it has, yeah, all the imbalance. No. And that little hour structure
Oh,
that
right
we were
here.
just talking about, right up in there. In
Mm-hmm.
my mind, it's gonna buy back up to that area. And I want to catch this, but I can't. So that's why I told you I never really took this trade. I'm looking all the way at the bottom. And once I see where price don't close below that lower low at the bottom, that's when I start looking for an entry. I wasn't looking for no entries nowhere over there. I was looking down up in that area. Yeah.
So let's do this. Hold on. Let me see if I can move this little thing up. I don't know why this little bar is in my way. Okay. So first we need to go up to the higher time frame. Based on the daily, where is your swing low and swing high? And you can mark it up with, wait a minute, hold on. So you can see it. Where's your swing high and swing low? I want you to identify the swing high, swing low, and the break of structure. Perry.
Oh, you can hear me? I'm sorry, I hit the mic by mistake.
Oh, now
Now
I
look,
can.
let me ask you something. Are we
Uh-huh.
looking just at that little structure where we was looking at? So I'm
want-
gonna go right here. That's what I'm gonna go with.
I want you to show me the last swing. We're on the daily. Show me
Okay,
the
right there,
last swing low.
right there.
Uh-huh. And then where's your breaker structure?
So far, my breaker structure for what?
Because you can't have a swing low without a breaker structure. So where was the breaker structure to cause that swing low?
Oh,
Come on, Terry. I got faith in you. I got faith in you, Terry.
up in this area.
Wait. What, Terry?
I'm tired. I can't write the damn
Terry, you're
thing.
acting like a 2-year-old now. Where's the
Wouldn't it
swing?
be?
I'm
Wouldn't it be
using it with
right
my
there
finger.
to the left,
Where's your
Terry?
swing? Your swing. Where's the swing that caught that? Where's the high that was broken?
Yes.
This is the high that was broken.
There you go.
That's
So
what I was marking at. This my finger. I don't know. I'm sorry,
your
but
finger.
that's what I was marking.
So
That area. There.
So you have this as your swing low, right? And it's, as you can see, it's a
Yes,
key
ma'am.
level, right? Then you had this as your swing high. You had this as your swing high. And this was the high that caused this low to be the swing low. So everything in between, so between your swing high and swing low, I always say it's in the middle, but when you get to this break of structure, price can come back. Remember, once you have a break of structure, price can come back and retest that zone. Okay, so let's go down to the 4-hour. So once price comes back to that zone, you have to, one, wait to see what price is doing. No, and let's go to the, we can stay on the 4-hour. So this 4-hour candle blew through the zone, but then pulled back to the zone. What I'm always looking for when price gets back to the zone is market structure. And what I mean by that is price pulled back here, right? So when price pushed down here and pulled back, at this point, there's no kind of market structure other than this high right here and this low right here. Right?
Yeah. No, nothing like.
So, when and if price broke this low here, that is when I would be looking for a pullback to then continue to the downside. Now, whenever we get the pullback, you again have to still look for price to pull back to this zone and then show you some kind of bearish momentum to move from this zone. Right? So I'm going to go down to the 1-hour to show you what I was looking at when you made that call. So on the 1-hour, I think it was, oh, it was right here. So on the 1-hour, because I saw market structure, right? This push down, this push up, and then price broke and pushed down. So once price came back up here and gave this bearish order block, and did not break my high at the time, my thought was price is going to push here and push back down, start pushing back down. But when it pulled back on the 1-hour, pulled back, now I would have been looking for a whole 1-hour bearish order block, right? In this zone. It's got to be in my zone. I would have been looking for a whole 1-hour bearish order block, but it did not do that. The 1-hour candle blew through and broke this high. So now my thought process has changed that it is going to pull back, which it did. I would love for it to have pulled back to the zone. But now my next level is going to be a 1 hour level. And I'm just going to put this here to make this, because this is more of a minor zone here, right? And this is the key levels. This is still the key level right here. So now I'm looking for price to either tap into the zone, show me what it wants to do, but it may continue up. Or it can tap into the zone, come back down here, and then start breaking structure. But I need to see the levels of structure. I need to see the levels of structure being made here. So we know price is going to zigzag and either break here, pull back and come back down here, maybe come back down here to continue selling, or price is going to zigzag, break through this high here, and then continue back up to this zone here. And then once price gets here, if it doesn't break this high, if it does not break that high and then start breaking these lows, I'm looking for the pullback to then sell back down to here. And then once price gets there, if GJ is going to sell like we've been expecting GJ to sell, then it's going to break through, pull back, and then sell down to the next zone. Now, I'm going to be honest with you. When I look at this
You don't think it's gonna sell?
on
And
the
you don't buy it?
daily, it has to break here for me to even consider the sell.
Yeah, that's the last swing
Okay,
low.
look,
That's the
I
last.
got to go. I'm sorry. Go ahead.
Go ahead, Terry.
Okay, I got a question. Zoom
Yes.
back on that same issue that we was messing with.
Right here.
And, yeah, and put it on. You're on our time frame, right?
I'm on the 1 hour.
Yeah. Now go back to what we was talking about earlier. I want to ask you a question, and you tell me. I know
The one that
it's
you
not
said
right.
right
Yeah.
here. Mm-hmm.
Okay. Now let me move. Let me use this little thing now.
So I'm gonna move my
Okay. So
zone. I'm gonna move my
when
zone.
price right here,
Mm-hmm.
when price went right there and bought up
Mm-hmm.
to right here, and
Okay.
then when it came back down to right here
Mm-hmm.
and didn't go below that,
You can only go
wouldn't
up
it be
to
safe for me?
you can only go up to the last swing. You can only go up to the last swing. That's the swing, right? So you
Yeah.
can only go up
How
to
many
the
pips
swing.
that is though?
How many pips?
Yeah, how many pips that is from there to there?
Wait a minute. Let me find out where you would have entered first, because maybe from here
Right
to
there.
here is about
That's
50
50
pips.
pips, Kim. 50 pips with a dollar standard. That's $500.
That you're correct. You are correct in saying that. But this is my thing with this counter trend trade, because this is a swing, right? And a bearish swing. Price could have just come up to this imbalance and sold back down. Does that make
So
sense?
that's no, it makes pretty sense. So that's what the intent of maybe I'm not watching it like I should. But if I'm able to watch it for
Yes.
them,
Price could have come here. Price, and I'm marking that up because this is price action to me. This wick
yeah,
right
that's
here
what
is
I
price
agree.
action. Price did tap into price did tap into this zone here. and push back, right? It didn't break these lows. And then you have an area of supply here. So price could have easily just tapped into this zone and then started selling back down. So that is why I need, for me to buy, for my confirmation, I need, first of all, I'm not trading this back up because this is a swing. This is a bearish swing. And yes, you can trade it up. I'm not saying that you can't. But I'm not sitting and watching the charts all day. I'm not sitting and watching the charts all day, okay? But once
Okay.
this breaks, once this swing is broken, now my thought process has switched from sells to buys. Now, we're still in this because of this impulse move. I would set an alert here. I would set, well, once I set this alert, it'll go off, but I would be marking up the possible pullback zones. So, and then that would be it. That would be all I marked up. So either price is going to come back to one of these zones and start selling, or it's going to come back up here, continue buying up to this top here, or it's going to break through this top and keep going.
Okay.
Because
see
if I look
what
at
you're
the
saying.
if I look at the bigger picture, price pulled back to the 618 and then started breaking structure to the top side. It had no respect for this whole swing right here. It had no respect for this whole swing right here. And then it broke. And now it broke, pulled back, and continue. So it pulled back to, oops. So it broke, it pulled back to another 618, almost a 778, and now it's pushing to the top side. Now, again, it can come up here and then drop, or it can just keep moving, keep going to the top side. And that's even without any of the fibs, right? Because this was an impulse move right here. It was also a minor, oops. A minor, this impulse move came back and retested the impulse of that move and then pushed out. So it can either push up here to push back down to these zones here, or back down to this zone right here, my key level. Does that make sense, Terry?
It makes all the sense in the world. I just be trying to get the catbird position, Kim. I'm sorry. That's all that is.
So the catbird, for me, when I'm looking, my catbird is once I get my break, the catbird is the pullback for the continuation. Especially if you're doing it from a key level, right? Especially if you're doing it from a key level, because 9 times out of 10, the price is coming back to this zone. Like even for this right here, price may come back to this zone and then keep buying. But,
Terry, you're not by yourself. I'll be doing the same thing. I gotta give it to you.
and I get what you're saying when you want catbird, but catbird is not is usually, for me, catbird is not the first position, not the first move. Catbird is usually the second move. The second leg for me is usually, see, like this was the first leg when it pull back and then I get a break of structure. You're going to get the most optimal trade and entry there is.
Now I got a question with you saying that. So would
Mhm.
you say it's better, like, okay, you do all of your preliminary markups or whatever on over the weekend and just avoid the market on opening and Monday and Tuesday? Because it seems like Wednesday is really when you start seeing more moves or the setup that you're looking for.
So
I think
absolutely.
that's my biggest thing.
Well, what I would say is because sometimes there occasionally will be a move on a Monday. Okay. Every once in a while, I've seen a move on a Monday. What I would say is if price is not in your key level or in your zone, don't trade it. Wait for price to
What
get
about trading
your
the opposite of what you think the trade gonna do?
huh?
What about trading opposite, like the dog's playing?
So this is my thing. Price is bullish. You should just be looking for buys. Like right now, so this is a push down, this a pulled back up, and then this push back down. Now that price has broken this structure, what did price do on this is on the daily, right? Price pulled back into your ICT, ABCEFG, TODD, Tide Zone, and it's movement, right? So price on this day was Tuesday, this was Wednesday, and this was Thursday. So Friday pulled back into your imbalance and is moving. Well, ended the day bullish. Let's just say that. So come Monday, what I would love to see, Monday or even Tuesday, is price to break this high, right? Then you look for your pullback to continue buying up to this zone.
Monday and Tuesday?
Monday or Tuesday, whatever day breaks this high, you look for your pullback entry to then buy up to this zone. But it's got to break this high though.
Let me see that. Let me see the 4 hour. I can't see nothing on this one. I need to see the 4 hours.
OMG. Okay, 4 hour. There you go.
I agree with you. I see it clear as day now. I agree with you. I would love to see that too. And then Wednesday, once it touch the top of the zone, drop it like it's hot.
Exactly. Now, if price pushes up here and then starts to break structure to the downside, then your target is going to be these lows. This low, because if it doesn't break this high and it starts breaking structure, like you got to see it breaking structure to the downside. Because we know price can go either way, right? And this was our last swing. So price could come here, price can pull back here and then start breaking down here. This could be the lower high. This could be the lower high. We just don't know, right? But based on this 4 hour, it broke this little minor level of structure. So this could pull back and sell. If it pulls back to this line right here, this trend line resistance, and starts to break structure, you can best believe it is going to these lows.
Now that is the swing high on that 4-hour structure, right?
As of right
Right
now,
now.
as of
As of
right
right
now,
now. Okay. I just wanted to make sure.
but price could come here and break this high. That, and then this will be your swing low. And then it can pull back and then keep buying, like I said, up to this zone, or even keep pushing up even higher. And the reason I say that is because in my head, price is bullish. Now there is, based on this 4-hour, there's an order block here that hasn't been tapped into. There's an order block here that hasn't been tapped into. So if price decides to push back down and does not break these lows, because this is the last swing, then I would be taking price from wherever price starts breaking structure to this high right here. Because it did not break this last swing low. So that means in my head, it's going to go at least up to this high, if not even high, if not higher. And based on what I've been saying for the longest, is that I am looking for price to take out these highs right here. I am looking for price to take out this high, possibly tap into this order block, and then start taking out the lows to create a sell to, and I'm just going to mark from here to, I'm just going to put it right here for now, because we don't know how far it's going to go up into this order block. But I do believe it's going to tap into this order block and then start selling back down to our 618, 88, 78 to the zones before pushing and going higher. Because now we have a break of structure. So you're expecting the pullback for the continuation. Now, when price breaks this high and I start seeing a break of structure, especially on the higher time frame, I am going Lambo lot size. Y'all, this is recorded. This is
All
recorded.
Lambo lot size camera.
I am. Oh, hold on. I didn't see y'all messages. Oh, sorry. Until the previous level of structure has been broken. That is correct.
So
Sorry.
why you wouldn't go if it goes start selling? Why wouldn't you go high?
Huh?
Why you wouldn't use the Lambo lot size if it starts selling? We get the right way it's going and then just break down. You don't trust it?
What do you mean? If it starts, you say if it starts selling?
Like you said, yeah, if it go right here where it's at, then it just start selling some more.
So this is the thing for me. This I'm on the monthly, right? But let's go to the daily. And let me move all these here. So if price does not break this high, so first of all, price would have to break this right now for me to go in for a sell. Okay.
Okay.
But if price is pushing back up, I'm definitely not getting in for a sell. Price.
Oh, no. Okay, I see. Oh, I wasn't saying that. I was just,
Now, if
it break down there.
Now, if price, but price has to break. If it breaks here, no. We're still in this swing. You're still
No, that's what I mean. That bottom swing. If it break that bottom swing, why you don't go Lambo lot side? That's what I mean.
right here.
Yeah, and it break retest
Yeah.
and then start to the downside.
If it broke here, at whatever the pullback is, I'm getting in for a Lambo. And I don't even want
Okay, okay. I just wanted
I
to
don't
make
even
sure.
want a Lambo. Okay. I don't even want a Lambo. Well, if it's a Lambo truck, maybe. But I don't even want a Lambo.
That's what I say. F250 lot size. That's what I'm looking for.
Not
Or
the F-250.
2500 lot size.
Not the F-250. So now, right? Because this key level, this is a key level. As we can see, we move it over. You can see it's a key level. Once price breaks this zone, pulls back, and it might pull back here. It might even pull back a little further, depending on what price is giving you on this way down. The pullback and then the continuation, at least to this order block, or at least to, like if you want to be on the safe side, but this is a whole key level here. Right? So if I see breaks the structure, then it's going from this zone to this zone. So we're talking, oops. Okay, I don't know why that didn't work. We're talking 824 pips. And you can keep this one, like the initial trade running, right? And then as price breaks these lows, we know it's going to break, we know it's going to pull back. That could be your second entry, right? And then once price breaks and then pulls back, then that can be your third entry. And then you can let all three, you can set the TP. You can either set it if you want to play it safe at the order block, or you can wait. If you're watching, you can watch it and see if it's going to tap into your key level. And take it to that zone. So let's see what that would be. So you have that's 276 pips here. That's a 2-to-1, a 1 to risk to reward, 1 to 2 risk to reward, right? And then here you have a 515 pips, which is a 1 to 3 risk to reward. Here, if you set your TP, that is a 722 pips, which is a 1 to 5 risk to reward. And then if you set it to your zone, it is 820 plus pips, and that's a 1 to almost 6 risk to reward. And if you have all three, and if you have 2 to 3 entries on that, then that just doubles, compounds that risk to reward and your equity. But you always want it to break first the level of structure, because this was a level of structure. This was a level of structure, right? You want it to break a level of structure first, then wait for the pullback, and then break another level of structure. Once it breaks the next level of structure, you wait for the pullback, and then you wait for it to get to another level of structure. Now, whether it's going to break this level or not, if it comes down here and doesn't break, and then breaks structure, then you wait for that to be broken, pull back to your zone, and then take it to your next zone. And if that happens, what I would be looking at is, well, if this breaks these lows here, I'm looking for it to come back here, and then I'm possibly looking at a bigger picture of a Head and Shoulders. And this could consolidate just like this consolidated back and forth, right? And then it could break and then start breaking down. Now, if I see a Head and Shoulders, I'm for sure thinking that GJ is about to sell. However, I need to see some break of structure first, the pullback, and then the continuation. Because if it doesn't break, the term buy until you can't buy no more, that's what I would be doing. Once it came back here, I would be buying. If it pulled back, I would be looking for the buy. If it pulled back, I'm looking for the buy. Because if it doesn't break these zones, then I'm always looking for the buy. That makes sense?
Yes.
Makes plenty sense. We learn in the day.
Yes, you're learning today. Well, Terry, you be learning every day. You learn every day. So that's how I would be looking at this. And I'm gonna leave this marked up just like this, just so we can.
Okay, I got another question.
Yes.
What if I had a goal, just to realistically, it's 50 pips a day.
50 pips a day. Okay.
Do you think that's realistically? And I could
Absolutely.
get it in one pair or different pairs every day?
So, okay, let's talk about it. So what I would love for you all to do is find 1 or 2 pair that you're going to trade at any given time. As you know, I'm GJ US 30 all day, every day. I don't care whether it's a weekly order block or a daily order block, or it doesn't matter, especially for GJ for me. I'm going to be able to get a trade in. You want to, wait a minute, did you say 50 pips a day? Or
Yes, ma'am.
a day? Okay.
Is it
So
realistic? I mean, I'm just asking. Is it realistic, or
it is
it's
possible.
easier to get to 250 pips in a week?
No. It is possible, but you have to remember that every day is not a trading day. Every day is not a trading day. So although I do the weekly analysis on order blocks, if GJ half the time is not always on there, but I am going to get a trade out of GJ no matter what. For the week. That's what I do know. GJ is going to give me an entry at some point during the week to play out. Now, if I am trading from zone to zone, we already know that that's not going to be in the day. That might not even be for the week. It may take 3, 4, 5, 6, 7 days to play out. But if I'm trading from zone to zone, then I'm going to get my trade. I don't look at the pips, but I know it's going from zone to zone. That's what I do know. Now, even when I look at this right here, here are a couple of zones, right? Because you have a couple of swings. You got a zone here, a key level here, and then you have this key level here. Okay, so if you want to just trade from this zone to this zone, that's 400 pips. Like, I want you to think bigger than 50 pips. Although you can easily get 50 pips. depending on what you're trading, what was the one I was just looking at? eChef.
I'm glad you said that because I was sitting here like, well, darn, is it 10 or 15 pips? But okay, think bigger, think bigger.
Yes, I want you to think bigger. Because even eChef from here, and let's see how long that took. So this tapped into this order block right here. Okay. And then let's just take it to the body here. You see that was 14 days just to get to the top of here. Now, if you want to do 50 pips, which came in here, 50 pips right here, this candle here. But then you're missing, like if you just target the highs and the lows, because now you're mad because this one went up even higher, right? And you
Oh,
miss,
now look, if it don't show no sign of turning around on me, I ain't getting out of it. I can't.
okay. Okay. So I would say don't target 50 pips, just target the next zone, the next high or low. It doesn't matter if it's a swing high or swing low or a high and a low, right? Because this right here is a high, this right here. Now that this is broken, this is a swing low, but before this was, oh no, this was it right here, my bad. So price is in between. So this is what I would ultimately like for you to do. Once you're trading from a zone to zone, I would love for you to have your first entry at the zone, right? Once you're in profit and this pulled back and gave you an indication that price is going to buy up, your second entry. Now, I don't want y'all to have a ton of entries, okay? But once this pulled back and gave a higher low and price broke this and this became your swing, stay in it until you get to the next zone. Like even if it's just 2 entries, one from your zone and one for when this pullback, take it to the next zone. Take it to the next swing, the next key level.
Okay, I got another question right quick.
Okay.
Now, you said don't get in. Well, you ain't supposed to get in the middle of
So
a trend.
go
So
ahead.
but
Go
now,
ahead. Go
let's
ahead.
say I missed that first. For whatever reason, I wasn't looking at the chart that day or whatever, but I see it push down and don't break that first entry.
Well, we already
It's safe for me to get in, right?
we already know you're gonna get in. We already know
That's right. We already know we're gonna get in. I don't even know why I'm asking you. I just want to validate, some of the stuff I be doing, Kim. That's all.
So what I'm saying is, and I say this more for beginners, and let me see who's all on this call, because I don't think any of you are real beginners. No, none of y'all on here are real beginners. So if I was doing it for an intermediate class, okay, y'all the intermediate class, I'm gonna say yes, you can get in, but just know that price can turn around on you at any point. That's all I'm saying.
Right. So, like, if it don't break that original or that little bitty swing high in that little break of structure, that little structure right there, and that little internal structure,
So
but
once
you already should know to start looking to get out
so
because
once
it might turn on it.
once it broke, oh shoot, hold on. Once it broke this order block. So we're on the daily, right? So when we got a bearish order block, we expected this bearish order block to be respected, right? Once price broke this daily order block, and let's even go down to a smaller time frame, because then it's a little more clear. Okay. Price pushed down. It didn't break structure. As you can see, price never closed below this zone. It reacted. It wicked. It gave a bullish order block. It wicked, like nothing closed below these lows, right? So once you get, and I know Terry,
Game time. Game time.
I already know. I already know. So once you get this break here, and then this pulled back to that zone and gave you a bullish order block, you could have got in. You could have got in. But just always remember that this, you want it to break past here. So once price got here and pulled back, this is where you need to be watching. This is where you need to be watching that. Let me find it here. So we have a low here, we have a low here, we have a low here, and really, as you can see, these are order blocks. And once this pulled back, didn't break the low, and then gave a little bearish, bullish move here, then you could have stayed in. And once it started breaking these highs, then you can move your stop loss, because this would have been your entry. This would have been your stop loss. And then this would have been your target, which is your next zone. So once price started breaking these highs, you can then start moving your stop loss. And I'm just going to move this up, because then you can just start moving it up. And every time you get a swing and a break, a swing low, you can just move your stop loss to those lows. So once it pushed up, pull back. Once you got a break here, now you can push it up to this, to that swing low, right? Once it pulled back and broke again, now you can push it up to this swing low. But you want to wait for that break. You got to wait for the break. So once it pushed up, it pulled back. Once you got this next break, then you push it up to this next low, right? Then once price pushed up and pulled back, never broke this low and broke structure, then you can push it up to the next low. And then, so this would have been the next zone right here, key level, right? So now we're just going to push this up to here. So if you're watching the charts, every time you get a push up, a pullback, and then a break, then you can just keep pushing your stop loss up to this, to the swings, to the swing lows. So once this broke and this pulled back and broke again, so now you're just pushing it to the last swing low. Okay. So now you can go look for your next key level. And I'm just going to go up to the daily right quick so I can see this. So the next key level is looking like it's about right here. Oh, it already tapped into that. My bad. So that you could have just been watching that. So right now for Euro Chef, You got to push up, a pullback, no break of structure. You got to push up, somewhat of a little pullback. However, based on the daily, if I was trading from the daily, I would say, okay, no break of structure, but I trade from the 1 hour, right? So based on the 1 hour, it tapped your zone. This is perfect. So if I'm looking at market structure, because you always want to look at the market structure. Okay, we had an internal break of structure. Okay. So we got a pullback and then another break. So you might get another pullback and then a push down. Now from there, you can either get, now let me push that down to here just a little bit. Because this is your low right here, from here to here, and then up to here. So if price does not break this low, and then you start getting breaks here and a pullback and continue, then you're going to take it back up to this high. As long as it does not break this low. Because now price came within this last swing, didn't break, and then started breaking structure to the top side. So you're going to take it even higher. And if you want to use your fib, you can fib it. And then possibly take it up to the negative 27. So if that's how it turned out, let's see, from maybe the 88 to the negative 27 is 170 pips. Or Terry, if you're trying to get 50 pips, 49.50. You would take yours to the next swing high. You would take it to the swing high. Or yeah.
Can I ask you something else? Huh?
Absolutely.
Okay, well, at first, that hour swing, where you just said where it broke at.
Right here.
Yeah.
Mhm.
And when it broke past and broke structure. Now, once I see that, can you actually put the fib on that as well, or it don't make no sense?
I just did that.
Okay, no, that's what I'm saying. From the top to where it broke structure and started turning. Like, if, let's say I'm looking at on the 1 hour, and I see it, and I just want to fib it right there to get an idea of where it go back. Does that make sense?
So let me tell you why I didn't consider that. Although it is an internal break of structure, right?
Mm-hmm.
And this is where the market will trick you, because you're considering this a swing when it's really not.
Okay.
And I say that because price, the real swing is this here. Now, if price had broken here, then pulled back here, and then pushed up here, this would be considered the swing low. That makes sense?
Yeah.
But price didn't break this first. Price pushed up, pulled back, and then broke. So technically, this is the swing low. If that were the case, this would technically be the swing low for the break. So I'm not considering that the swing. So
I was just asking if it made any sense to do it.
Not for me.
Try to give you an idea of what price may be going. That's all I was wondering.
Not for me. Now this pull back to the 50%. So this could just go back down to, and let me just show you. And because it's bearish, because it's counter trending, that's why I'm like leave it alone. this could be coming back down to this key level here. There's an impulse move that's within there. There's an impulse move that was in there that price could come back to because this was a key level, right? And then we have this one push, we have this two push. You know, I'm always looking for a third one. Those, oops. This is a one push. This is the two push. So I'm looking for the third one. It probably come here and then start pushing back up. I would not be looking for, I wouldn't be looking for this. I'm looking for the buys because it's bullish. You done had this whole bullish run. You should not be looking for buys.
You mean sales?
So
I mean, you should not be looking for sales. Sorry. My bad.
Hey,
Oh,
Kim.
when I said that, I'm sorry. I was saying I was looking for it to buy back up, and that's why I found my interest for myself. That's what
But
I
no,
was.
but you
what I
say
was saying.
fib the down move. You don't want to
Yeah.
fib the down move unless it's breaking your actual swings. It's got to break
Okay,
your
okay.
actual swings. And this is not considered.
Oh, okay. I got you.
This is not considered the swing because it did not break first and then pull back and then push up. If this had pushed up first and broke this high and then pulled back and created this low and then pushed up and which made that a swing low, then this would be a break of, this would be a break of structure or even a change of character, a slight change of character. So then I would fib it.
Hey, Kim.
Yes.
Can I don't know. I guess it's an ask or a recommendation. I don't know what word to use. I didn't understand market structure until this year, and I started trading 3 years ago.
Okay.
And since learning and understanding and really having a grasp on market structure, I actually know what is going on now. This was the first week that I finally could really read the chart and actually explain what was happening. And actually that is due to coming into these calls and really like paying attention. Also really that video that Ant put in the chat one week, maybe a couple months ago now, of that market structure video. And basically what I've come to the conclusion of is obviously market structure matters the most. And
yes.
yeah, and knowing where the swing points are matters so much. So
Yeah.
I don't know how many other people on the call are very like well versed with market structure and understanding how to point out swing points. But if there are people who are confused still, could we maybe like do like a workshop or something where people literally like,
I like it. I like it.
yeah. Just a recommendation. I don't know. I finally feel like comfortable to share now. I remember a few weeks ago we were on a call and y'all were like, why don't you share? And I'm like, I'm not comfortable yet, but I finally kind of feel comfortable. So yeah.
I'm gonna get you for not feeling comfortable.
That video was fire. I ain't gonna lie. I think it actually opened my eyes. That's when I started looking for this internal structure after that video.
Yeah, that video changed everything. Like
What video?
The market structure video, Ant posted a while back ago.
Yes, that was really good. Yeah.
So I definitely recommend to either, because like I said, some people don't mark up the key levels like I do. But if you just go, and I'm just going to erase this for now. But if you just mark up your swings, like, and I would say 4-hour swings. If you just mark up your swing low, your swing high, and you know that this was the break of structure, You don't even have to mark it up like that. But if you know that's your swing high, you just know that anything from here to here, anything can happen, right? Price can pull back. This could be pull back to the 618, 78, 88, pull back to retest this and then keep going up. And whenever price comes to, as you can see, when prices, and this is what I want y'all to see, like the counter trend trade is always going to be choppy, always going to be choppy. The impulse move of the trend is always going to move expeditiously, okay? In the words of T.I., it's going to move expeditiously. Like it's going to be quick. It's going to move like you don't have to worry. And when you see price move back, when you see a impulse, when you see an impulse move, and then you have a pullback and then another impulse move, like these pullbacks should not scare you out of your trade. As long as you know the market structure, these pullbacks should not scare you out of your trade. Okay? That's what I want y'all to be able to see. Even with this push down, even with okay, we're gonna talk about it. Y'all ready for a serious conversation?
Yes, please.
We ready. We ready.
And I'm saying this with love. Okay.
Do we need to take notes, Kim?
No.
Okay.
This is recorded, so I'm saying this with love, but I don't ever want anybody, I don't want someone else's analysis to, I don't want you to allow someone else's analysis to take you out of your trade. Okay? And when
Say that again.
I don't want anyone else's analysis to take you out of your trade. Okay? And when and or if
Wait a
it,
minute, Kim, for the third time for the people in the back.
hold on, let me say it again. I don't want anybody analysis to take you out of your trade, right? And it when and if it does, because it happens to all of us, right? I don't want you to fault anybody else for you jumping out of that trade. Because you can either hear what they say and trust your analysis, or hear what they say and get out of your trade.
TT what?
Who said TT?
Terry. Cause I was
Yeah,
in
yeah. I ain't never forget. A couple of weeks ago, y'all was telling me something about one of my trades, made me second guess myself,
He
and I
said
got
he's
out.
holding.
I'm blaming y'all.
He said
I'm
he's
blaming
holding.
y'all. I'm bringing up old stuff. I'm bringing up old stuff.
No, Terry, you are not
And he's
gonna
still blaming
blame.
people.
You are not gonna blame TT or Kai for getting out of a trade.
That's
Terry.
right.
If you trusted your analysis, it's either going to go to your TP or it's going to hit your stop loss. Okay.
That's
So
just
I'm
like how
just joking, y'all. I'm just joking.
Girl Chef was that way this week. Yes, other people had other analysis, but had I just jumped away from the trade because people were like, okay, it's selling, why would you buy it? Will it buy? So if I'd have gotten out of the trade, I wouldn't have gotten the trade.
mm-hmm.
You know?
Yes, just no market structure. I'm telling you, as long as you know,
As long as the market structure is
our
fine
market
and
structure.
you can stick with it.
Yes,
This
absolutely.
why you
See,
got
Terry, you know, the girls got to look out for you because, you know, you step in the dark side so often, you know, so they just be trying to look out for you.
Hold on, say that again.
I said the girls got to be looking out for you because, you know, Terry, you be stepping over there on the dark side sometimes, you know, so we just try to pull you back.
All I know is that dog side been flip my account times 2 this week.
Oh my gosh.
Kim, I think another thing that's important too is, well, first of all, what you just said is absolutely true. I had that thing happen to me this week, finally, with GJ. I knew GJ was buying. I felt like it hadn't broken structure, so I shouldn't look for the sell. And I stayed in my trade, and I was able to increase my little account by like 3 or 4%. So that's absolutely true. And
Yes.
then also not not making your expectation bigger than what you actually see. Like, you can expect there to be a pullback because you want to see proper price action or price distribution or whatever it's called. But if it's not showing you that, you can't go with your bias over what you actually see.
Yes. Yes. And just if you
I'm gonna
just
be honest, that's a whole problem for me because that's where I be getting janked at.
how?
What she just said, I be seeing stuff and I don't know. I just make myself see what I see and not what the market is showing me.
What did you trade this week?
I ain't even gonna lie. I killed my account at the beginning of the week, so your girl been training all week, watching the videos.
Oh my God. Well, okay, which trade blew your account?
You shelf.
You chef?
Yes, I thought I seen it buying at the beginning of the week and
Oh,
it
you
just went the
chef.
other way.
Okay, so wait a minute, hold on, let's talk about it. So you thought you saw, let's go to the daily. Or no, let's stay on the 4 hour. Okay, so let's mark up our swing. So we had this here is our swing low, and this was our swing high. Okay, so you said Friday.
Where that big old drop at. I thought it was going the other way and it just smashed me.
And that's why I say you got to trade the trend. So you thought it was selling.
No, I thought I was going on up to the next level buying, but I'm guessing instead of me paying attention to me already being at the level and that it
Oh,
was coming down,
you was trying to
yes, I
buy.
was trying to buy it and it just
So
hurt my
you were,
feelings. That's
so you
all.
were trying to buy it at the high.
I'm guessing that's what I did.
Yes, that is exactly what happened. So, and I'm just going to mark it up here. As you can see here at this high right here, price broke through, wicked, nothing broke past this high. Nothing closed past this high. Let me just say that. And matter of fact, let me go to the 1 hour. Which time frame do you trade on?
Well, I do like you teach us go from the top down, and I didn't really know that you could go lower than that to find the entry. So I tried to come in off the hour and see there to your left where you have the bull movement right there in the zone.
Right
So
here?
I was thinking that was
The
my
break.
chance. So when it pulled back, I got in.
Okay, so let me explain this because this is what I look for. And I think I might have explained this before, but if not, then I want to make it clear. Whenever I'm looking for a break, whenever I'm looking for, and let me find something that's, let's do this one. Okay, so price is bullish. Whenever I'm looking for a break, right? I want to see price push up and then pull back into somewhere between my high, my swing high and swing low. So that was my swing low right here. It did not break till here. So now this is my swing high, right? So once price pulls back, I'm waiting for price in my zone to see what price is going to do, right? And I'm going to say this also, for those, I know most of y'all are intraday traders. I think there are some swing traders. And how I mark it up on the 4-hour, how I mark it up on the daily, how I mark it, like, I'm going to mark it up the same way on the 1 hour, whatever time frame. But because I trade from the 1 hour, I can mark up my 1 hour swing low and my 1 hour swing high, wait for price to pull back. As you see, there was an impulse move to the downside. So I needed to wait to see, and this is why don't do the counter trend, because price is bullish. Now, if price had closed below this low, you see it wicked it, but it never closed below this low. So once I started getting all this rejection, hold on. Okay, so price never closed below, oops. Price never closed below, do y'all see that?
Yes.
Yeah, yeah.
Price wicked, and then it wicked, and then it gave a bullish order block, and then it pushed up, gave a whole nother bearish order block, but did not close below these lows. So the minute I got this bullish order block, because I know that's what price is going to do. Price is going to push up and it's going to give you a bearish order block to trick you in, because most people will take this as the swing, but it's really not the swing because price never broke below these lows, right? Price would have needed to close below these lows in order for this to be the swing. But as you can see, price tapped into this and then sold back down. So people are thinking, oh, this swing, it pulled back into that and now it's selling back down. But you have a whole order block zone here that price is tapping into. It is now officially a key level, a 1 hour key level. Now, I just want to show you something just so you can see what I'm talking about. Oh, yeah, this would have been the wait a minute, was this it? I forgot where I was. Hold on. Oh, yeah, that was it. So based on what we talked about earlier, that 1 hour key level does not look like a daily key level because it's on a smaller time frame. But if you pick the daily key level, it's automatically a 1 hour key level on the lower time frame. That makes sense. Now, I do love that this was a 1 hour, a daily order block, because I like to mark up my daily order blocks and 4 hour order blocks as well. But this was a daily order block that you're expecting price to come back into, but it did not. But on the 1 hour, you're seeing it as, and this whole thing right here is the daily. From here to here is the daily order block. I just wanted to say that so you can see it. But once price got to this zone, this 1 hour swing high, swing low, swing high, right? And started rejecting. It did sweep. It did a sweep. This was the sweep right here. Swept all the lows and then came back in and then started rejecting and giving bullish momentum, right? So now once price start to break, some of these highs, not swings, but some of these highs. So I personally telling you, I would have taken from this order block, from the zone. I want to see it in the zone. I want to see the sweep. I want to see the rejection. I want to see the bullish momentum because we're at my swing low. I'm never going to buy when price is up here at this zone, unless unless price breaks out, and I want to see a push out, and then I want to see a pullback to the zone. I want to see market structure. I want to see a break of structure. I want to see a swing low, and then I want to see a high. So now I can look for price to pull back to my key, to my zone. Pretty much look for the same thing. Look for some bullish momentum, and then get in from the zone either to this next high or even higher. That makes sense, Sherry?
It does, sure does.
So you want to see a push out and then a pullback. So where you were right here, there was no push out. Price was here. And I'm just gonna mark it up right here because I'm almost pretty sure I know what you were looking at. Like price was right here and you saw the breakout, but there was no, if you're looking at market structure, so there was a little break right here, but you want to wait to see price break. You want to wait to see price break out.
Okay, right there where you are, down there at your bottom zone where it's choppy at. See, I started there and did my swing and came back and swing and came back on the hour instead on the bigger time frame. So I was like, oh, we gotta go for that third push. And then everything was in alignment. To me, it was anyway. And so I got in. But oh well, it went the opposite direction.
So once you start getting like a movement where you can fib, right? Because if we're looking at market structure, right? This pushed up and then this pulled back and then this pushed up. Once this started pulling back, that's when you can mark up your zone, right? So once you mark up your zone, you just need, again, for price to push out of that zone and then pull back to that zone. And then that's when you start looking for your rejection. Or
Okay, I got you.
bullish-
That makes
bullish-
sense.
like give
Go
it time
out
to
and
give it
retest.
yeah, give it time to push out first and then pull back.
Okay.
Yeah.
Can I suggest something, Kim? I know you ain't gonna, you don't agree with it when we talked about it, but it, to a degree, it has been helping me kind of identify where something like where we at on both of those ends where you said you were looking for the buy and for that situation that happened with Cherry.
Right here. Mm-hmm.
Yeah. That one that where you said it wicked, but it never, that to me was, I would have considered that an inside ball.
Wait a
Now I
minute.
put a,
We're here or
yeah, what you at right there?
okay.
What you was talking about for the buy. Okay, that one right there. Which one you was talking about where you
This one
where it wicked, right? Because I saw it clear as day when you was on.
I think he's talking about the last red candle before it broke out there. Go back to the right.
was I on wait a minute, was I on the
Where you was there, right there where you
There
at the
it
bottom
is.
where you got them lines drawn up.
right here?
Some more to the left, some more to the
Oh,
left.
right here. Okay, I see. I see.
Yeah. Okay.
I got
Now I know you said you saw it. Once you see it, you can't unsee it. So it's just something that just started being in my head. So if you look at that one right there where that path is,
right here.
right there, I put a line at the top of that and the bottom of that wick. And I'm gonna wait and see what it do. The top of that candle, that last push down where it wick. You put a line, right? Yeah, put a line at the top of that candle.
Okay.
And a line at the bottom of that wick.
Okay.
If that's my inside ball, I'm waiting for it because we had a level of structure. I'm waiting for it to break out that. Break out of that either way. And then that's when you get your entry.
I can get with that. I know I joke about the inside bar, but I joke about it because a lot of people are talking about the inside bar when it's not at a level. You know what I'm
Oh, well,
saying?
I always try to look at it it got to be at a level before I'm even considering it.
Because
For
even
me,
like this one here, you know, this was an inside bar and then it started selling down, right?
right?
So, and I'm sure if I looked, let's see, monthly. I'm sure if I looked over to, well, I don't see it on here because this would be the swing. And then this would be, yeah, I don't see it on here. But on the 1
Oh,
hour,
you see it at the bottom, though. I saw it at the bottom on the monthly.
no, I mean like this right here. Like
Oh, okay, okay.
once you get a candle and then you get the inside bar, like I don't know that that's going to be a level based on this and this right here. These two candles, yes, I can mark up that zone. Once I get the color flip, once I get a green candle and a red candle, I could mark up that zone. But we don't know if it's going to sell or if it's going to buy. I don't know if it's going to pull back to this little minor break of structure and then start buying up. I don't know. The fact that it's bullish, I don't mess with it. That's why I don't mess with it. Either price is going to pull back to my zone or not. It's either going to pull back to my zone to keep buying, or it's going to break my zone, pull back, and then start selling. So that would be the only time I would start looking for sells. Otherwise, I'm continuing to look for buys. Like I'm not even, I don't care about this pullback for 1, 2, 3, 1, 2, 3, 4, 5 hours. Around the 6th hour, I'm looking, I'm watching. Now it's a few hours later, right? But price never broke below this low. So I am watching. And I wouldn't have marked up this one, but this order block that people would have thought was selling or causing the sell, once this order block got violated, that would have been my cue right there. So once this order block got violated, even it wicked past here, this wick past here, price could have easily tapped into here and started selling. But once price closed above both of these order blocks, this would have been the one I would have looked for. That would have been my cue that price is buying. And
So the key point to
and like I said, this really would have been my cue because it's in my zone. But go ahead. I'm sorry, Cherry. Go ahead.
oh no, you just said exactly what I was getting ready to ask. So to be sure that I understand it, if it's not in the key zone, then don't pay no attention to it. But a key zone area, it can kind of be some attention paid to it.
I was going to say, if you understand that the market has swept but never closed, it gave you a bearish order block that closed higher than the rest of these lows, and then gave you a bullish order block. If you understand that, especially being at a swing, it's not even just the level. This was the swing, the last swing. If you understand what this is doing at the swing, then you understand price is still continuing to be bullish.
Gotcha, make perfect sense.
Okay. Because you could have said, okay, well, here's a bullish order block. Let me just set my alert. But if you know that the market is going to grab liquidity, you got to wait for that grab. And this was the grab right here. This was the grab. Then this pushed down, not breaking this low, and then gave a bullish order block. I would have set my order block. Well, I don't need to do that. I would have set my order block here, put it below the grab, That was 6 whole pips on a 1 hour time frame to take it to this next zone. That was 40 pips. If you want to take it up to the high, that was your 50 pips. And if you wanted to watch it, if you're on the chart this was at 7 a.m., you were on the chart, you see that this gave a bullish order block at your zone at this high. So I definitely would have moved my TP. Of course, I would have had to look to the left to see where I wanted it to go. So the next high, the next swing would have been, oh shoot. The next swing would have been this right here. Let me go to the 4 hours so I can see it a little better. Okay. So the next swing would have been here. The next high would have been here. Like these would have been your targets right here. Okay. Those would have been your targets if you're not, because remember now that you're zooming in. This thing is getting on my nerves. Wait a minute, hold on. Now that you're zooming in, you know this is your swing. So this is probably the 78, the 88, 100%. So now that we're there, now that we know where we are in our bigger picture, we know that price may tap. Okay, and let's fib it so we can, I can remain honest. Okay, here's your 78, here's your 88, right? So price may go up to the 88 and then might start selling because you're in your last swing. And then it may come down here. If it's not going to break this low, price is at least coming to this key level right here. So if you see on this 4 hour USD Chef, price either tap into, it's already tapped into the 78, right? It tapped into the 78. And what did it do? It started selling. For everybody that knows, the 78 is an entry for a sell. Price gave you exactly what you're looking for. It tapped into the 78 and sold. But for those who don't know market structure, don't know that it could sell. And as you can see, it sold back to the initial break, retested that area, and then started buying up some more. So right here is, am I on replay? Hold on. Am I on replay? No. Okay, good. So now that price has broken this zone here, price has broken this level. So now this is your, we can move this out right here. This is your swing low, and up here is your swing high. Should have kept that up there. And up here is your swing high. So if price, and we're on the 4 hour. So if price breaks below this zone, you're going to wait for the pullback to wherever. I don't know where it's going to come back to. Because you can fib. Now you can, once price breaks this low, you can now fib to see where price may possibly come back to. It might even come back up to this order block right here that wasn't tapped into, right? And then sell. But that's what I would be looking for. But if price doesn't break this low, then we going in for more buys. Buy until you can't buy no more.
Okay, Kim, quick question, quick one.
Yes.
Those little wicks not no tap into that imbalance, for that candle you just said?
The wicks. Oh,
Yeah.
this one right here.
No, at the top. That's in other words, that big push. This one here. All that's not no taps into that candle.
To the order block.
Yeah.
It could be, but we don't know. Price is bullish, so you don't know until price breaks structure to the downside. We don't know if price is going to keep going up or if it's going to break down. But you want to trade what you see and not what you think, right? So you want to see the break of structure. You want to see it happen first.
Okay, maybe I'm overstepping. Didn't make myself. Once it break like that and break structure and come
Like
back.
here. You mean right here?
No. What you talking about for like if we was going for the sale? Once it comes down like you got the path going.
Uh-huh.
Yeah. Me, I don't know. Like I said, I wouldn't expect it to buy back up that high. That's just what I'm saying. I'm guessing. I don't know.
So once it breaks that zone, then you have to fib it. So price may come all the way back down here before it starts pulling back up, right? So and you got to recognize that this is now your a 4-hour key level, right? So price could just tap into this key level and then push down and then push back up to the zone and then could sell down. Once price breaks this zone here, that's almost my cue that the sell that the JPY pairs, the JPY sells that like Todd has been looking for, if it breaks this low, then I'm all in for the sales at that point. And the reason why is because when I look at market structure, right? And price pulled back to an optimal trade-in entry.
Oh, I see it.
And then showed you that it's starting to break structure. Now I'm looking for sales to the downside.
Oh, and that's why you go Lambo lot size, because you know it's gonna drop a good bit before it do any retracement.
But I'm not gonna go Lambo lot size until it pulls back again. So once you have this first break, if this happens, right? Once you have the first break, and you might have you might have your 3 pushes, and then you might have a pullback up to here, maybe up to this order block. And as soon as I see, because I got my zones here, as soon as I see the break of that zone, a pullback, then that's when I go Lambo lot.
All right, I got you.
Because now it didn't break this high. It started breaking structure. So we know we can at least take it to this low, if not the -27. So yeah. So that's why this is always like, if this push happens, we know that the second leg is going to give you exactly what you're looking for. That's when you can go bigger on the lot size. But it's got to be, I'm waiting for the second leg. I might get in a few entries here. Like if it pulled back here and started breaking structure, I'll get in. But what I know is it's likely pulling back to this level, this initial break right here, right? And it might pull back here and then push back here and then start selling. But because it broke this like I know I can at least take it to here, which was the initial break of structure of this move, market structure. Y'all know what I mean. It's a little few others in there too, but you can take it here and either buy it up and keep buying it until you start seeing a break of structure without breaking these highs. And then once you see that, that's when you can catbird yourself in and take
And
it
level it out.
take it to the next level. Even if you just took it to this back to down to here, and then you waited for price to show you what it wants to do, always look for the market structure. So if it pushed back and then broke here, and then just I'm taking it down to there, or this level right here. There's another key level right here. So you want to see the little stair steps climbing. You want to see it climbing. And then on the way back, you want to see it stepping down, stepping down, stepping down. So yes. And if you can see, I have this is a 1 push right here, and this is a 2 push, and this is a 3rd push, and this is a 4 push. So I have to at least see the 3 pushes. The 3 pushes. So this would have been the 3rd push, right? It pulled back, but it did not break. And I'm not even looking at like, because right here, this is a bunch of noise, right? This is a bunch of noise, like, but it didn't break below the zone to then pull back to start to convince me to sell. Because people would have said, oh, it's breaking structure here, right? People would have said it's breaking structure here, so it's selling. That's not the case, because that's not you have to look at your structure. Because the big move was here. This was the break of that big move. So price pulled back to that zone. Now, I'm not gonna lie, if price had broken through and pulled back and showed me some levels of structure and broke, then I would have been down. I would have been selling down to there. But because that did not happen, you keep buying. You keep buying. And for here, it was a little break right there, but there was a break here, and then this little pullback would have, or you could have just waited for this, or you could have waited for the break of, so there's an order block here, right? A bearish order block. So this pulled into the bearish order block, violated the bearish order block, and then pulled back, and then kept going. If you didn't see that, you could have done this high here, this push. Soon as you saw the break, it started breaking right here, and you had an order block right here. You see how it pulled right back into that line and then bought up. And then you could have just brought it up to the next zone. There's so many ways. If you didn't get in on this line, you could have got in on this order block right here. And that would have been at least 89 pips or more. But because the price is bullish, you expect it to go up even more.
I appreciate it. I was like, I need to find me a pair where I can pop up some charts in the group, like
Okay.
Terry and Kai.
So this is what I would like for you to do. I'm gonna give y'all some homework assignments here. Oh, wait a minute. I see all the I will say on Sunday, I want y'all, well, it's market closed. Y'all can do it anytime. It doesn't have to be on Sunday. mark up whatever pair. I want you to find 1 or 2 pairs to trade. It doesn't have to be 2. It can just be 1. I'm going to challenge you. This is a challenge.
Don't sound good already.
1 pair. I want you to find 1 pair, okay, that you will trade for the next 30 days. What's today, the 5th? I'll give you till, how many days in May? How many days in May? To the end of May. I want you to find 1 pair only. Because I'm telling you, it doesn't matter what you trade. It does not matter whether there's a weekly order block or a daily order block. It just matters that you're looking at market structure and trading the trend. Okay? From now to the end of May, yes.
Sounds good to me.
What I
I
want,
don't know. I don't know, Tim. I don't know.
You
huh?
said find 1 pair. You said now to the end of May, find 1 pair. I'm sorry, you connected to
Find-
my card
Yes,
and it kind of went out.
yes, I want you to find 1 pair, and I want you to post that 1 pair in the Trading with Lil Kim chat, the pair you're going to trade, right? And then I want you to mark up the daily zone, the daily key level, and from that key level, I want you to mark up the I want you to identify the last major swing. Let me hold on. I'm about to write it down right now. I'm about to write it here. Oh, no. That's not what I want. No, that's not what I want either. Hold on. Hold on. What's my chart? What's the call out? That's a text box. That's not what I'm looking for, but okay. Challenge. I want you to find 1 pair. Oops. Why is it doing that? Okay. 1 pair to trade from now until the end of May. Okay. No, Terry, 1 pair. Oh, shoot. Why is it not letting me? Okay.
It was just gonna be SPX and EJ. That's the ones I was looking
They're
for.
going to be XPX or EJ. Which one you want?
I don't know. I'm gonna have to make up my mind.
That's so sad. Okay, find 1 pair to trade from now until end of May. So mark up the daily key level, and then identify your market structure, or no, identify your last swing. On this thing don't like me. Oh, there we go. Identify your last swing on the daily. And then mark up your swing high and low. That's what I was looking for. Mark up your swing high and low. Okay. Post in the Trading with Lil Kim channel. Oh, shoot. Okay. Well, then you stay over on the dark side and shoot, Terry. Stay over there.
I'm just messing around. I just buy and sell that one pair. That's all.
Stay over there. Okay. All right. Okay. That's what I want y'all to do. This is exactly what I want y'all to do. This is on a 4-hour. You know what? I'm gonna change it to 4-hour. I want you to identify your last swing on the daily. So meaning I want you to identify whether, because you'll know if it's a bearish swing or if it's a bullish swing, if price is breaking structure on the daily. Okay. So I want you to identify your higher time frame swing, and then I want you to mark up your, that's what I'm going to say right here, your 4-hour, identify your last major swing, and then mark up your 4-hour swing high and swing low. That's what I want y'all to do. There it is right there. That's the challenge. Comprende?
Sounds
Yes,
good.
ma'am.
Comprende.
All right.
Wait,
Think we
don't close
got
it
it.
yet, Kim. I need to take a screenshot.
Have at it. Let me hold on. Let me pose. Go ahead. Take a picture.
Thanks.
So the pose, there's nothing to it.
Exactly. Okay, then that's
Hey,
it.
Tim, can I ask a question?
Yes.
Will you be teaching the subscription trading course?
Is that Yvette? Who said that?
It's Adrian.
Oh, hey, Adrian.
Hey, Kim.
Yes, ma'am. Myself and Todd.
That was real? I thought it was a
You thought it was April Fool's?
I did too, honestly.
Oh, no, y'all didn't.
Okay.
Well,
No,
your
it was
girl
just the
trying to make you
timing.
Yeah, it
No,
was the timing.
it was just the first of the month.
I know, but it was April 1st.
Oh.
Yeah, that's April Fool's Day. There was so many people being like on social media. So I just assumed. But okay.
It was perfect timing. I'm surprised nobody said anything about it being April 1st.
Yeah, I'm surprised too.
And I
I
started
actually didn't even realize it.
and I typed that in there, then I said, let me delete it because I'm gonna get kicked out of the group.
Why? By saying it was April Fool's?
Yeah,
By
because
like
that's what I thought. When I read it, I was like, oh, that's a good April Fool's. I started typing, oh, I like y'all April Fool's joke. Then I deleted it. I said, that might be real, and I get kicked out of the group.
Now you know we would not kick you out, Cherry.
I don't know, Todd be on his period.
Trust. If certain people ain't been thrown out this group, you are not one to be thrown out this group.
Todd be on his period. I am done.
I said, yeah, shh, don't tell nobody. Shh.
Todd would kick you out. Now there are some people
Well,
that
hopefully he don't watch this video because it's recorded. Can you ring when it stops the recording?
I'm recording it and I'm telling him he need to go to the 2-hour mark. 2 hour.
I ain't said nothing.
I am telling. He gonna watch it too. Watch.
But look,
Y'all know y'all ought to be ashamed of y'allself.
That was the AI. That wasn't me. The AI generated voice.
Like you, Jerry. No, that's funny. No, now Ty wouldn't kick you out. There might be some other people that might kick you out, but it wouldn't be Ty. Todd only kicking people out if they haven't been present in the group, fully. This right here look like it's about to drop. I ain't gonna lie to you. This look like it. The way this wicked and this wick, boom.
Yeah, you ain't even gonna hold us, Kim. That look like it's about to be juicy.
I know, right? And there's my pair.
Gonna lie.
Y'all about to pick USD, chef?
Right, I'm finna change.
Oh, no, I ain't picking that one. That one moved too slow.
That's my pair. Y'all back off now. I said, Lord, I want to post a chart. Everybody I'm gonna pick me a pair that I don't never hear about.
Find you something. Look, is Anna on here? Let me see. Anna on here? No.
I don't think so, Kim.
No, she's not on here. Anna chose, and that's why I have this on here. The
USD. Mexican.
I'm telling you, and I said, Anna, she was like, I want to trade it. And this was her key level right here. Let me go to the daily. Yeah, that was the key level right there. And she traded from like here to maybe here. I think she got out of it around when it pushed back down to here. And I was like, you better hold. She got out of it before it pushed all the way back down. So she might have got out right. It was one day. It was a few days, like a week or so ago, 2 weeks or so ago. And she got out. Now, right here, I probably would have said, okay, it's about to buy. But you would have had to wait for the next day to show you what it wants to do. And look what it did. It did absolutely what it wanted to do.
Wow.
It broke through. So now you just gotta wait because there's nothing over here. Oh, yes, it is. Oh, shoot. Yes, it is. So price is either going to come back to this zone here. This is no, I think it's going to come back to here, to be honest. Or it might break through here, pull back, and then sell down to there. But, I mean, you can pick any pair. It does not matter. You don't even have to pick a currency pair. If you wanted to pick a stock or anything, a metal, silver, gold, whatever you want to pick, you can pick a stock, a funds, a future, whatever. It doesn't matter. It's all the same. Crypto. I never tried bonds, but I'm sure it's probably all the same. Let's just take a look. Did I add it? Oh, there we go. You see, it's all the same. It is all the same. So if I marked up, this was my swing. Price came out, broke. It didn't pull all the way back, but if I marked up my key levels, it is all the same. Price pulled back, started breaking structure, pulled back into a Todd order block imbalance, and then started buying, right? Like it is all, it does not matter what you trade. That's the key level right here. That's the swing. Oh my God, look at that. That was really the move right here. Right here. And price.
Okay, Kim, I got a quick question.
Yes.
You said stocks. Now, I done tried to look at some of them stocks because my partners be asking me about stocks and stuff. But they be having them little breaks in between the days. That messed me up.
Yeah, that's just the probably the open and close of the weekend. This was a Monday 14th.
But I don't see no gaps on yours. They done picking the wrong ones.
This a gap right here. That's a whole
No,
gap.
Kim. Pull up them other stocks. They be having big old stocks in the middle of the day. Like, yeah, see that?
A stop. Wait a minute. Where you see a big gap?
Like, big old, look at all them gaps in there. That threw me off. That threw me off. I'm sorry.
But why?
Cause it don't look like a regular chart's supposed to look.
So the same thing. Right here was your last swing, right? Price pulled up, pulled back, pushed up. Let's look at it. Let's look at the market structure. Pushed up, broke structure. Price pulled back to.
Can you look at them like imbalances, Kim? I mean,
That's exactly what it is.
You can, yeah, you can look at it as imbalance.
Yeah, that's exactly what it is.
So right here, this was the open of the imbalance. And let's see. Hold on. That was the open of the imbalance. That was a close. If you didn't trust that this was the imbalance right here, then guess what you would have done? You would have waited for price to break, because this was now the last swing of that move. Price to break. It pulled back into the imbalance. It pulled back into the imbalance and then sold off. It's the same thing. Same thing.
Those are throwing me off too. Like Tesla's looks crazy sometimes. I'm like, I don't even want to touch that.
Let me tell you.
Thank you. I beg to differ.
Let me tell you, Tesla, you want to buy your Tesla? Trade Tesla. Trade it. Look at market structure. You have the last swing here, right?
You trade this, Kim?
Well, I used to until I said, well, when I wanted to buy a Tesla. Then when I decided I didn't want to buy a Tesla no more. I didn't do it. I don't trade it no more.
The spread on it.
Huh?
What's the spread on it?
What's the spread on Tesla? I'm not sure. Hold on. Let's see. Hold on. Because I removed all that stuff from this. Niche. I don't need extended hours. Let's see. Okay, Tesla. Oh, shoot. I don't know. You know, I never look at spread, right?
No, I didn't know that.
Like never. Like
But sometimes the spread is so big, especially around like news, it puts you in way farther down from where you are.
True.
Doesn't bother you?
Nah.
Wow. Oh, well, you're swing. Yeah.
Huh?
I said because you swing, so it doesn't matter as much,
I'm swing
right?
trader. I'm not a swing trader.
Oh,
I want to get in and out.
oh yeah, me too, me too, me too. Okay.
I want to get in and out. Now, if you call it 3 days, 3 days might be a swing. 4, 5. Max for me is 3 days. I'm usually out of my trade in like 3 days. Yeah, I don't know about the spread, Terry.
I was just asking.
Yeah, I don't look. I
Some of
don't.
the platforms don't even offer. They offer the bigger stocks, but they don't offer all of them.
So if you
Like you
see
might
right,
have the Apple, the Tesla, and stuff like that.
yeah, even if I show, well, you see where I have family stocks right here, because I have a cousin who when they ask about something, this is what I go straight to this and I tell them.
I'm on Trade Locker looking right now, and the spread's 29. I have KOT Forex as a broker, and you can trade it on you.
For Tesla,
Mm-hmm.
29. This is what I do for my cousins. They're in this stock right here. It's broken here. I look, I need to call them and say, hey, price broke. It's about to buy up. I'm looking for buys. I would be looking for buys if I had the stock.
Hold on, what's the name of this? I'm gonna put that on my I got a little Coinbase account. I'm gonna find that joint.
VCI is, I don't know where VCI is. Hold on, I'll tell you. I don't, like I said, I don't trade it. Vicinity, I have no idea. Couldn't tell you. I just know my cousin asked about it. I put it on
It
here.
looks like a REIT. Since it says properties,
Oh,
might
it
be
is a
real
REIT.
estate
It is
investment.
a REIT.
Yeah.
It is a REIT. You're right.
What is a REIT? What does that mean?
People who invest in properties, like invest into REITs, which gives
Real estate investment trust.
Mhm,
Yes.
Oh,
which gives you like
So which one it is? VC Properties Inc.
huh?
Which one is it? VICI Properties Inc.
VICI.
This was actually a good find because a lot of people don't want to buy physical real estate anymore. A lot of people are
Yeah.
switching over to REITs. So that's super interesting.
They can just invest their money and
Get a return. Yeah.
and instead of actually finding a REIT to invest in, you can trade it yourself.
That too.
Okay.
this is really great. Thanks, guys.
Now that you know how to trade, you don't have to trust a REIT to trade anything for you. You can just trade the REIT.
You can trade the value of it. You can trade the value of anything.
Exactly.
We are really blessed. We are
Yeah.
really blessed.
No, it's crazy. There was this interview that I was watching, and this guy was a multi-millionaire just from trading like energy. Like that's the commodity specifically that he traded.
Mhm.
Like that's crazy that you can even do that.
What's the guy's name?
Wow.
Because it's NG something for energy. What is his name? Javier. Hold on, let me find it. He's on YouTube.
Well, you giving out all the gems today, Kim.
Let me see. JOOVIER. Oh, let me share my screen. Hold on. Young guy. He trades energy. I don't know what he trades, but I do know it's NVIDIA. Isn't that the AI thing?
Yes. I wish I got into that.
That's a big one.
And he trades NG, which I think is energy.
Hmm.
And he's killing it. Killing it.
Do y'all know Ian Dunlap, the master investor
Ian,
on Instagram?
yeah.
That's like his handle. Yeah, I
Uh-huh.
remember when he talked
Wait,
about
what?
NVIDIA. Ian Dunlap,
Yeah, Ian Dunlap. He's with
Earn Your Leisure.
Earn Your
yeah.
Leisure. Mhm.
yes.
Did you
That's
say Scandal? I'm sorry, that's what I reacted to.
No,
He said it's-
he. Oh, go ahead.
he was in a scandal.
I
No,
thought
no,
that's what I heard. My bad.
no. He was the first one where I heard about NVIDIA like a long time ago now, and it's like I wish that I had listened to his advice. Like
Oh, yeah.
NVIDIA has
Man, did you see
skyrocketed,
how much it skyrocketed? Oh my
right?
God.
So when he talks, I can tell that he is a great trader.
Hmm.
Because he's always like what you can hear him, you'll hear him say certain things that we know. Like it broke a swing, it broke a high. So, once it pulls back, then we can get in for the buy. Yeah. I hear him say stuff like that all the time.
Now my question is this. That thing NVIDIA then blew it up real high.
Mhm.
And you know I like looking at them counter trends.
Let me
There's
see.
got to be some kind of money when it comes down to him.
Let me see. NVIDIA. Is it
NIVI.
NVI? No, that's not it. It's
Oh,
I think it's NVID, like NVI.
NV.
I think it's
Yeah,
NVD.
NVDA. Yeah.
yeah, yeah, that's right.
NVDA.
NVVIDIA.
NVD.
NVIDIA
Hey.
right here. Let's look at it. NVD.
Look at that. Look at that.
That's insane.
This is looking like US 30.
Yeah,
It got to come down sooner or later, huh, Kim?
One day. One day.
That is wild.
And I will say
We'll put an alert on it.
the day it comes, that's what you do. The day it pulls, well, you definitely want to get in this sell, right?
Okay,
Yo,
how
that's
in the
law.
world- what platform y'all on doing this? Because
It's a
I don't
trading view.
No, I'm saying, but still, you gotta have something outside of trading view.
Because NVIDIA is let's see, what is this?
Semiconductor.
It's just a stock. It's not an ETF or a REIT or anything.
It's just a stock. So you need a platform that you can.
Yeah, that's what I'm meaning. Your platform, that's your intermediate. I mean, I know you can
So
see
you
it
can
on
do
trading view.
E-Trade. You can do there are a lot of let me see which ones I got.
I hear a lot of good things about Webull. And I think if you deposit $100 at one point, I don't know if it's still going on, but they give you 10 free stocks.
I have Vanguard and the fees are really small.
Vanguard. So I think I have E-Trade and then I have another one. Look, I don't even know what I have.
I think Coinbase has it as well.
Coinbase, you can do Coinbase.
Crypto.com.
Any of those. Just Google
Okay.
platforms to trade stocks on.
All right, good deal.
And then look for something that is, reputable.
Oh, Lord.
And then do exactly what you know. Look for market structure. I'm on the 4-hour here. So this is our low here. And then this is already marked up. This is our high. So if price breaks below here, you wait for the pullback well, on stocks, you can't do that on stocks.
What?
You can't sell. You can't buy the sell. You know what I'm saying?
Yeah, you can't. Yeah. You can't make money on the change. It's just the price you have it at, what it's valued at.
Yeah. So you wait for price to pull back to the zone. And I'm already counting my 1 drop, the 2 drop, and the 3 drop. So now I'm either waiting for price to get back here and break, and then wait for the pullback to get in for the buy, to buy it.
Oh, excuse me. So you saying you can't sell it?
You can't buy the sell. You can sell if you already have it. If you were in the sell down here and then you knew price like broke this structure and was pulling back, you can sell it so that you can keep the higher value or the high
Oh, okay, no.
sell the
I just thought. I'm thinking of options.
options. Yes, I don't know about options yet.
Yeah, because I would say you could put a contract and you want that price to drop down to, like you said, we looking for that sale. If we got it at the top,
Yes.
you could be like, okay, I want the price. My strike price would be $790,
Mm-hmm.
and you could
But
get
you
a
look,
contract
oh,
for that.
sorry. Could
Yeah.
you look
Oh,
at
go ahead, go
VU?
ahead. I'm sorry.
Look at who?
VU. It's a Vanguard ETF that follows the S&P. I really recommend it.
I was curious. I thought I had VU on here.
Vanguard on the word. Anything is a good bet with them.
VU?
VOO.
Oh, VOO. Wait a minute, I could have sworn I had VU on
See,
here.
I'm gonna need somebody type up a cheat sheet and drop it down in the little pin chat.
I'm telling you though, in your leisure and Ian Dunlap, that master investor guy on Instagram, they're who I found out about. And I find this through them. He always says like what, 2 tech and 2, I can't remember the other 2, but yeah, I recommend him.
So we're on the 4 hours. I mean, it's the same thing, y'all. The same thing. We're on, let's go to the daily. Let's go to the daily. And I know you see all this, this little stuff here, but it's the same. Like I would mark, would I mark here? No, I would mark this because this pushed up and then pushed down, right? This was a low, this pushed down, created a higher low. So this would be my low right here. All right. So once price and then price broke here, there was no break above here. All right. So once price pushed back down, let's go to the 4 hour. You look at your structure, your bullish structure is here. And then your bearish structure 1, and you got 2. So this is probably going to push back up in here and push back down, right? So price either has to break below here to sell or create some level of structure and break above, push back to go back up to the zone. I mean, it's just like that.
Can I ask you a question? What's the lowest time frame you're looking for a break of structure? Like you're not going below that.
So I normally watch the chart on the hour. So if I get a bullish order block, so if price comes back down here, and do the same thing, like if I see either, if it doesn't sweep and then I'm looking for, it's got to be some kind of structure in this zone. So I'll either see it on the 1 hour or you can see it on the 4 hour a lot of times. But because I watch the chart on the 1 hour, that's what I'm looking for. So if I get a bullish, if I get a bullish order block with some momentum, meaning it's giving me like here. So this came down to, you see, this was the swing, right? Oops, I don't know how I did that. This was the swing, and then price pulled back to this area here, in this wick, and then gave a bullish order block. But this was it right here. So once I saw the bullish order block, you could, and it wicked, didn't break these lows, gave you a bullish order block, you could have gotten in right here. This would have been a tied entry. But I'm waiting for it to break this last swing, and then I'm getting in from there. Now, once I see this break, I normally just like really just go from where price put from here, but you can go to the 30-minute and see if on the 30-minute, it would have been a violated order block, right? You could have got in again right there. Once it created this, then you have all this imbalance. Then that's the ICT strategy. Once you get that third candle and the break, price is going to pull back into the imbalance. Now, how far into the imbalance, we never know, right? But you can, and I don't even know how to count the pips on, or I don't know if that's 10 or 100. But it pulled in just a few, and then started pushing up. So now you're in. Once it broke my high, my original swing high from the hour, and then pull back, you could have got a second entry. There was the tapped here, gave a bullish order block, and then pulled back into that order block. And then once you got this order block, then I would have said, okay, that's go time. This is your zone. I don't know.
I'm thinking it's calculated like the S&P and the US 30, if I'm not mistaken.
Well, S&P is a little different. Because for S&P, this would be 85 pips. But for US 30, that would be, oh, no, I'm sorry. I'm tripping. Hold on. Is that not? See, I don't know how to calculate. I just know how to do the trades. That's all. I don't try to make it complicated. But I definitely would have taken it above these highs here. I wonder if, hold on, let me see. Let me see something. Let me see something. VOO. Let me take off my VOO. Oh, no, you can't trade it. ND. Nope. NG. I think you can trade NGAS. I don't know what that is. Anywho, I would see if I can find it on TradingView. So I have switched. Okay, y'all, let me just give y'all the details, okay? I have switched from, I still have my Sway account, but I did get me a KOT account because I wanted to trade. I wanted to mark up and trade from the chart. You can do that on Sway, but Sway's chart is a little wonky. Okay. I love the cleanness and clearness of Trade Locker because it is like TradingView. I just don't like the creators, okay? But sometimes you gotta bite the bullet and do what you gotta do, okay? So that being said, I put $1,800 in my Trade Locker or in my KOT account. So we're gonna see how far I can run that up. I'm gonna be doing what y'all do. Whatever the challenge y'all doing is the challenge I'm doing. Oh, you better get on your hands and knees, okay? And pray. that you can still continue to use MT4. Wait a minute, who's your
I've been praying, Kim. I've been praying every day. Lord, just don't let them. I'm just waiting for. I've been waiting for that email for about 2 months now.
oh, wait a minute, who's your broker?
Don't call it in, Terry.
LQDFX.
Oh, LQDMX. DFX. What is it called? LQ?
DFX.
DFX. Yeah, I think that's the one Baba has.
I'm kind of loving DX Trade now.
Huh?
I'm kind of loving DX Trade though. I ain't gonna lie.
So I was using the DX Trade, but I don't know why it kept flashing and it was giving me a headache. Like the chart just keeps flashing black and white. It just keeps going black and white. And it was giving me a headache. I even sent something to the support and they just never got back to me. I was like,
I don't even bother looking at that chart. I still clear up a trading view, but I just
no, I was still trading on TradingView, but when I went to go mark up DX Trade, it was the flashing was just it was almost like
oh, you mean the numbers?
No, the whole chart was flashed.
Oh.
Hold on, let me see if I can pull it up real quick.
I love how it gives you the projected how much you're gonna make from the trade and all that stuff.
Does it do that for you, Kai?
I love it. Yeah. I was just like
Well,
so bad when they switched.
Trade Locker does that too.
Trade Locker does the same thing.
Oh, it does?
Yep.
Mm-hmm.
Okay, so y'all gonna help me if I ever do get kicked out of MT4, right?
We're gonna beat you up first, Terry. We're gonna beat you up first, and then we'll...
Exactly.
That's fine. I figured I didn't put your ass with the big folk.
You're so stupid. Okay. Let me see if I can get in to my Trade Locker account. I done kicked it to the curve. How do I let's see. It was through Rocket. I think I have to go through Rocket. I'm gonna show y'all exactly what it was doing. Let's see, dashboard. Oh, that's affiliate. Downloads, maybe. Platforms. Here we go. Oh, wait a minute. They done changed it? Purple Trading. Think Markets. Oh, I didn't know they use Think Markets. Okay. Competition. Let's see. See, now I can't find it. Tools. Nope. Dashboard. See, I can't even find it now, y'all. But I'm gonna figure it out and I'll show y'all how it's flashing. And I just couldn't do it. I just couldn't do it. I just couldn't do it. But
Kim, I have a question.
Yes.
It's nosy kind of, but do you have any update on that small account that you'd been growing?
Oh my gosh. Okay, I will tell you. Let me see. Hold on.
You want to stop recording?
Hold on. Yeah, let me stop recording. Thank you guys for joining. See y'all next week.
Good day and good night.
Good day and night. All hearts and Alicia hit it.
If all hearts and minds are clear.
All right. So let me start recording.